All right, let's get our market guest then. Nirmal Jain, Chairman of India Infoline, now joins us. Nirmal, good morning. First, how do you react to the kind of resilience our markets have shown to the Greek crisis and the fact that most of the markets stumbled, but we didn't? And does this mean that we are immune to any kind of incremental news flow from Greece?
Greece, in fact, accounts only for 2% of Eurozone's GDP, so it's not a very significant event, and to a large extent, it was already discounted. In fact, most of the banks have been insulated because the debt has been taken over by the sovereign. And as far as India is concerned, obviously our dependence on this at this point in time doesn't look significant. Earlier, people were worried that will this impact on the risk premium that or risk aversion to emerging markets? Will there be a flight of capital back to safe haven? But those were exaggerated fear, and obviously some people might have gone short, and that is what was very swift recovery yesterday showed. So I think as far as India is concerned, the factors that will play out more would be reforms and how government is able to kickstart investment cycle, and of course followed by monsoon and the domestic factors. I think they'll be more important for Indian markets.
Okay, so let's talk about these domestic factors then. Nirmal, monsoon had a good start but then faded after that, and there's a good chance that the earnings season again might not be too good. With these two factors combined, what can be the downside risk for this market?
So I think we should understand market from immediate short-term perspective as well as medium to long-term perspective. So if you look at medium to long-term, then our markets look very good because one, FI flow will continue primarily because India is much favored investment destination as compared to say China, which is other large competitor for flow of FI money at this point in time. So our growth is picking up, albeit slowly, but is definitely in the right direction and positive direction. So India is a long-term growth story. Reforms and policy measures are in right direction, so that augurs well for the medium-term trend of the market. Therefore, earnings impact can be there, but so how the large IT companies or the bigger consumer goods companies they declare the results will be more relevant. People aren't expecting much from infrastructure or capital goods at this point in time. I think the revival will start from maybe the second half of this year. Cement also, I think results are not likely to be very good because cement prices were lower and the demand and the offtake was not so. There wasn't any growth in last quarter. So more or less analysts have factored in this, and I think most of the fund managers would also not expect exceptionally good results from June quarter. I think so. The joker in the pack will be banks, PSU banks and private sector banks. What kind of NPAs show up on the balance sheet? What kind of profit growth they show? So I think that is very key, and that is what we should watch out for.
Nirmal, the market has gone up from 8,000 levels to 8,500 without practically any FI inflows. Can it continue to go up without that?
So if you look at last 5-6 years, FI's flow have been in the typically around $20-25 billion per annum, which is not significant given the size of the economy and given the potential of domestic money that can flow into mutual fund and insurance companies. So I think one significant trend we should watch out for is domestic money flowing through mutual funds, and we in last 6 months or maybe last 1 year, equity mutual funds have seen significant inflow, and I think that will continue unabated because now the retail investors having burnt their fingers in the volatile markets would prefer to invest through mutual funds, and also they become attractive in terms because the SEBI and the regulatory changes have made the charges not significant. I mean, they removed the entry load, and in fact, it become more attractive investment vehicle. So, flow of money from domestic mutual funds, and also I think domestic insurance companies should accelerate, if anything, in next 2-3 years.
You spoke about banks earlier. Can private banks take back the leadership?
I don't think there will be much significant unpleasant surprise, but still we should watch out for results. So more or less private sector banks will report steady growth. That's what I would like to believe. And even amongst public sector banks, some banks will stand out and some banks will have difficulty. So public sector banks is a mixed pack. It's not that all the public sector banks can be painted with one brush that they will have problems. I would like to think that some public sector banks probably will give positive surprise also in the results.
Okay, what about the crude prices, Nirmal? We have seen again a second round of slide from 70 to sub $60. So two-part question. First, is there further move left in oil marketing company stocks? And second, will this move be a further re-rating factor for Indian market?
So oil prices going down is good news for India. I mean, as all of us know that oil is the most significant item on our import bill, and that impacts our current account deficit directly, and also it impacts fiscal deficit. It's a huge burden on the exchequer and the public, and also it has inflationary pressures if the oil prices go up. So what we see now with this correction is that the new normal for oil prices would be around 60, 70 or in that range, and not 100, 120 as it was in last few years till last year. So I mean that really is good for India, because $1 fall in crude can save almost about $1 billion for the country. And that in fact that's very good for macro, that's a good positive macro development. And I think over longer term we'll see impact of this, because that will help faster economic growth, that gives more money in the hands of government to spend on investment, public sector, as well as various schemes of the government. So it's a positive development.
Nirmal, of course, TCS will start with the earnings season this Thursday itself. We saw a big fall in the stock and now about a 10% recovery. How are you placed on IT in general and TCS in particular?
I think that IT will again be a little bit of mixed bag. Some of the companies will announce better results, some of the companies will not. But it's very difficult to hazard a guess at this point in time. I mean, your guess or maybe consensus estimate is what one has to go by. But I think IT companies' results will also be very important trigger for the market trend in the short term.
Any sector that can give a big rally from here on?
So once you look at consumer discretionaries and also sectors like automobile and capital goods. Capital goods will be sector will revive very soon. That looks like that most of the capital goods companies are now saying that they are getting orders. Their capacity utilization is now going up, and they have a very high operating leverage. So there's once your volumes go up a little bit, the margins can improve significantly. So maybe next couple of quarters, one should look at capital goods sector very carefully.
What about the pharmaceutical sector, Nirmal? We've finally seen some buying after the heavy correction, especially in names like Sun Pharma.
Pharma sector looks quite positive. In fact, so some of the formulations that China used to dump, I mean that has reduced, and somehow it's not. So that is giving an advantage to some of the Indian pharma companies. So this is a long-term steady growth sector. There are very few sectors there where you can have visibility of earnings of say 15-20% also for 5 years. So this sector should continue to do well, and but there's a wide variety of pharma companies. It's not a homogeneous sector. I mean, there are different kind of companies, different product categories, different markets, and different plans also. So one has to look at each stock carefully, but as a whole, I think the sector looks very good.
Okay, Nirmal, so if you were to see your neck out, what is the higher probability? Nifty going to 9,000 or going back to 8,000?
I'm always an optimist, with biased view, but I would still look at the optimistic side of the Nifty.
Okay, so 9,000 is your view in that case. What's the time frame?
I think that from this level it won't run away in a hurry, so it will take few months. Maybe we'll wait for some more trigger like rate cut and things settling down in the European markets and everywhere else. So you should give 6 months at least.
Okay, Nirmal, we'll leave it at that. Thanks so much for joining in and sharing your perspective on the markets. Time for a short break.